Oil prices slumped again on Wednesday as traders fear that Brent crude may follow the plunge of the WTI oil futures and turn negative as well. However, we can still see some signs of a moderate growth during today's trade. The ruble remains pressured by the situation in the oil market. On Monday, US oil futures tumbled to the negative territory for the first time on record. Some traders assumed that this drop was caused by a technical failure. However, it has become clear now that this was not the reason. The plunge in the crude prices for May delivery continued, and now the June contracts are extending losses. Likewise, Brent oil followed the downtrend. Now it's an overall market tendency which reflects fears over the sharp drop in global oil demand. The report on crude inventories from the American Petroleum Institute contributed to the growing concerns. According to the API data, oil stockpiles in the United States rose by 13 million barrels last week. Market participants are aware of the fact that oil storage facilities will soon be filled to the top. Besides, the current global economic downturn has deteriorated the risk sentiment in the market. Investors are worried that oil producers' reaction to the changing market situation is not quick enough. Market hope that the slump in oil prices may become a turning point, which will urge producers to make the biggest cut in oil output as soon as possible. Meanwhile, the speculations that OPEC may start reducing output already in April have not supported crude prices. Oil is still weak due to the steep drop in demand. Therefore, the market may again see Brent and WTI futures sliding to the negative zone when the June contracts expire. Today, the June contracts for West Texas Intermediate crude were seen trading at $11 per barrel. The US oil prices showed a modest rebound in the early trade, but later the negative trend prevailed. Brent oil futures for June delivery edged slightly lower today, having lost 10% of their value. In the morning session, Brent crude was trading at $17.40 per barrel. The recent collapse of oil prices has pushed Brent to its lowest level in the past 21 years. How deep the crude prices can fall is still hard to predict. The technical factors are not so relevant now. According to Russia's energy minister, oil market will stay under pressure until the OPEC Plus agreement on output cuts comes into force in May. As expected, the ruble is weakening amid the current situation in the energy market. The attempts of the Russian central bank to keep its currency afloat may prove to be ineffective, even if it increases the volumes of currency injections. These measures may help ease the pressure on the ruble, but will not offset the overall negative impact. On foreign exchange, the US dollar has passed the level of 77 against the ruble. The dollar-ruble pair opened the session with a rapid growth. Later, the ruble managed to slow its downward movement, and the pair retreated to the level of 76. In the current situation, Russia's central bank may decide to keep the rate unchanged during its policy meeting on Friday. This will trigger a round of sell-offs in the federal loan bonds, given that their prices already include the possible rate reduction. You were watching Market News on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.